some amount of an up move as far as benchmarks are concerned since the day's low, where we did open with some amount of weakness, where earlier on in the session there was follow-on selling. We're now seeing a little bit of a rise and perhaps a bout of short covering now coming through as far as the benchmarks are concerned, but no conclusive evidence if the markets want to head up higher, at least at this point in time. And I reckon there will be a lot of resistance on the higher end as well. For now, however, the Nifty is comfortably trading above the mark of 21,200. Let's talk about all the contributors as far as the benchmarks are concerned to see where the support in fact is coming. So for something like from the Nifty, if you can actually pull out the constituents, so we do have the likes of HDFC Bank, Reliance Industries and Power Grid providing a bulk of the support. And on the losing end is it's a little more secular. So banks once again, however, are also at the top of that list. So Axis Bank, ICICI Bank and Bajaj Finance and it's along with HCL Technologies weighing down and the index to a certain extent. That's as far as your benchmarks are concerned. To talk very quickly about your broader markets too, I'm going to very quickly point out what's happening in the small cap space because we do have a lot more traction when it comes to the small cap index, the constituents of which is something like a Hindustan Copper. That's up around 10.3%. We've been talking about the copper story, we've been talking about copper prices, and of course, because of the benefits coming through, we also have Hindustan Copper, which is also up and about. In fact, currently trading near days highs at the moment, up by around 10.5%. Metropolis is the other one. A lot of conjecture around not just Metropolis, but the entire diagnostic sector. And this is largely because of the kind of rise that we are seeing in COVID cases. And I reckon that to a certain extent, we've taken some traders who've taken speculative bets at the moment right now. But Metropolis is up nearly 7%. And then, of course, we have gains in the likes of Cochin Shipyard and Mazagon Docks, largely on account of orders coming through for both these counters. So with that, very quickly, City Union Bank is one of the few counters which is under pressure, down 5%, and IIFL Finance, we're going to talk about that as well. That's down by as much as nearly 3.2%. But what are the large trades that we are going to focus in today's day of trade? Well, Ami Organics, Mahindra Holidays, Piramal Enterprises, along with Motherson Sumi Wiring Systems. These are largely the four companies where we have seen larger plays at hand with respect to volumes as well as large bets. So that's something that we will discuss going in. And with that, let's shift into the first gear with Ami Organics. I'm going to get in my colleague Varsha to talk to us about that, because this is where we've seen a significantly large equity change hands. Varsha, let's start off with the details on the deal itself.
So as you rightly said, first Agam, if you see, AMI was down almost 5% in intraday today, though it recovered later. Now this was on the back of 12% equity change hands in a large trade. Now buyers and sellers are not known immediately, but let's look at the shareholding pattern as on September 23, where you have Plutus Wealth Management holding around 8% of stake in the company. And also interestingly, there's one family called Chovatia family, which is under public shareholder, which holds almost 17% stake in the company, followed by Malabar India Fund and Ashish Kacholia.
It's very interesting to know that the Chovatia family has a considerably high stake, and they are, of course, not a part of the promoter list. But Varsha, why don't you take us through, the several of the other factors which are playing out for and against Ami Organics?
So first, let's look at the recent updates for the company. So if you see, they've signed an agreement with Fermion. Now this agreement is for 2 additional advanced pharmaceutical intermediate. Now this is in addition to already signed agreements with Fermion in November 22 and September 23. Now this will actually be a significant contribution for their FY25 revenue. And also if you see, the Q2 performance of the company has not been up to expectations, although there was a revenue growth for the company, but if you see the margins were 14% versus 19% as compared to last year. Now this was due to high cost inventory and lower finished good prices. Other reason for the low margin was their export business didn't took up well, and export business being a high margin business, so because of not good business from export, so their margins were low. Also, if you see, they're expecting margins to go back to previous level from Q3. And the growth triggers for future, if you see what are the growth prospects for the company. So Fermion contract is one where significant revenue can be seen from FY25. Also, they are also entering into electrolyte business and products in semiconductor industry through acquisition of Baba Fine Chemicals.
Right. Thank you so much, Farsha, for getting us those updates on AMI Organics. We'll continue to keep an eye on that one. From there on, we shift focus to Piramal Enterprises. In RBI's recent move on AIFs, lenders are scrambling to fix issues related to their investments in AIFs. IIFL Finance now joins Piramal Enterprises in disclosing its exposure AIF investments, and it has an exposure of about 182 crore rupees. Mimamsa is joining us to give us some more on the updates with respect to the same, along with the provisioning. Mimamsa, good afternoon. What do you have for us?
Hi, good afternoon, Agam. So IIFL Finance, after Piramal Enterprises, has disclosed its exposure to AIF investment, which stands at about 182.44 crore rupees. Now, out of this, 21.37 crore rupees is the company's investment in IIFL Fintech Fund. But the major chunk of AIF investments is held by IIFL Home Finance, so which is about 161.07 crore rupees. But IIFL Finance says that the home finance company is adequately capitalized with the capital adequacy ratio of 47.55% as on September 30. So they have not really disclosed whether they are going to liquidate these holdings or they are going to provide entirely for the investments, against the investments, which is what RBI wants these lenders to do. So the RBI has directed lenders to either liquidate their holdings or to make 100% provisions. But liquidation has to happen within 30 days. So that time period is pretty short for lenders to look for a buyer or sell off these assets, because these are essentially illiquid in nature. So if IIFL Finance has to liquidate the holdings, it would impact the CRAR, which is the capital adequacy ratio, by a margin to 46.39% against 47.55% at the end of September 30. Now, for Piramal Enterprises, they will have to set aside provisions of rupees 3,164 crores against its investments in AIF units. Now, this is a significant hit in the company's net worth. Like Jefferies yesterday had estimated that it is going to impact the net worth by 10%, and the net worth stands at 28,710 crore rupees at the end of September quarter. So, talking about the specifics of Piramal Enterprises, the value of AIF investments held by Piramal Enterprises and its subsidiary Piramal Capital and Housing Finance, it stands at rupees 3,817 crore. One more thing to note is that out of the provisions that Piramal Enterprises will make, which is 3,164 crores, 1,737 crores is invested in 3 entities, which are the debtor firms of Piramal Enterprises, which is exactly what RBI wants to curb, which is called the evergreening of loans.
Right. Well, some very crucial details coming in as far as Piramal and IIFL Finance are concerned. We must remember that because of the fact that the 30-day period given to these NBFCs may not be enough is the reason why some of these NBFCs are in fact going ahead and choosing to make those provisions. Mimamsa, thank you so much for joining us and giving us those updates on this crucial piece of news in terms of updates. But time to move on for an NDTV exclusive, and in conversation with Vishnu Som, former WHO Chief Scientist Soumya Swaminathan talked about the new JN1 variant of COVID and its implications for India. Listen into a slice of that conversation.
What we're seeing now is a surge in this particular variant globally. It's been first detected in August, but over the last couple of weeks, many countries have reported that it's the fastest growing subvariant, and the WHO calls it a variant of interest because it has certain mutations that might make it more transmissible. Now, coming to India, as you mentioned, we've just started increasing the testing. So over the next few days, I think we will see more data coming from many states. Right now, it looks like a few states like Kerala, Karnataka, Maharashtra, perhaps Tamil Nadu, they're reporting an uptick of cases. and this high positivity. Now, the positivity rate also depends on who you're testing. And so if you're testing sick people who've been admitted to the hospital with pneumonia, then there are a few possibilities that, and COVID is certainly one of the possibilities or the differential diagnosis. And so you're going to pick up more as you start testing more and more people. And I think at this point of time, probably the testing is going to be limited to people who are sick, who are presenting to the hospital, because there's so many respiratory infections going around, that it's impossible to test every person who has a cough and cold. But this type of strategic testing is very important because it will tell us how much is influenza, how much is COVID, how much is other viruses, because obviously the treatment and management will differ.
Right.
And what the genomic surveillance will then tell us how much of COVID is JN1 and maybe other variants are circulating as well.
And on that note, let's take a break for now, but stay tuned to NDTV Profit for a lot more on the other side. Welcome back to Large Trades, and we now shift focus to Mahindra Holidays, and that's in focus because the stock is under pressure at the moment. In fact, it's down by as much as 3.3% as we speak. And the reason why we pull it up, besides the fact that there has been a large volume in it, is the fact that, well, what could go wrong potentially with a company which is in holiday season? Let's find out. Let's get in my colleague Anushi to give us an update on the same. Anushi, what do you have for us?
Absolutely. As you mentioned that the stock is under pressure with about 4%, it being 4% down. Now, this is because of the increase in volumes that we are seeing with the company's volumes buzzing at about 4 times its 30-day average. Now, it is not just today, Agam. If you look at the previous day also, the stock did see some downward pressure of about 5%. If you dig deeper into it, according to Bloomberg, it suggests that the company the insiders of the company have been reducing their stake, like from the past 6 months, the stake has reduced about 5%. So that can be a possible trigger for this one. But just to end it on a positive note, the analysts tracking the company, they hold a buy rating of this and see an upside potential of about 29% still. So that's all on Mahindra Holidays today.
Anushi, thanks for getting us those updates. So it is important to understand that insiders have been reducing stake, and it's likely that today as well we have seen a little bit more severing with respect to the shareholding there. Currently under pressure, down by around 3.2%. We'll continue to keep an eye on that one. And from there on, we move on to the final large trade, which is in focus, and that's Motherson Sumi wiring. Now, this one, in fact, has seen a couple of sessions as far as, large trades go. Let's get in Hemant to give us an update on that same. Hemant, good afternoon.
Good afternoon. Motherson Sumi, the auto ancillary and manufacturer of electrical components for commercial vehicles largely, has seen a slew of large trades over the past, in fact, this week in overall. Today, it saw about 31.7 lakh shares change hands, which is about 0.07% of their overall equity. However, buyers and sellers were not known immediately, but we also saw the same happen yesterday, where 10.4 lakhs worth of shares were changed hands, which is about 0.02% equity stake. This has put some pressure on the stock overall. After opening in the red in early trade today, the stock has reversed and is now trading about 0.7% up. And in terms of its performance, it has been a tad rocky, to say the least. YTD, the stock is up about 4.67%. And in terms of its overall performance as well, the company has been seeing a compression in margins as far as the past 3 quarters are concerned. However, analysts are still optimistic on the stock, given that it is a beneficiary when it comes to the mega trends that are playing out in the auto space. A lot of its key customers are based in EV and are rapidly expanding. So the outlook does look bright for the company.
Right, Hemant, thanks for getting us those updates. The outlook, in fact, will be the most important, because while the company and the management does suggest an uptick from here on, we must also keep in mind that the company has seen, in fact, a compression, a little bit of a decline when it comes to margins. And on account of that, we really haven't seen too much traction with respect to Motherson Sumi. So on a year-to-date basis, when you do have the mid-cap and small-cap indices give you 35% returns, Motherson Sumi, on the other hand, is giving you a return of no more than 4%. It's a clear underperformance as far as this specific company goes, and we're going to have to continue to keep an eye on for that one. But for now, at least as far as the performance is concerned, that is of the share price, it's lackluster. We move on, and we talk about what my colleague Neeraj Shah and what he spoke about to BEML CEMD Shantanu Roy, and how their double-digit EBITDA growth has come through over the last year. Listen to a slice of that conversation.
What I can say is that, yes, last year we had almost touched double digits as far as our EBITDA is concerned. And this year, I'm pretty sure that we will touch the double digits, and we may even grow the EBITDA by around 200 basis points. Whether it will reach the late teens or not, that's for the future to see. But one thing I can say is that we are in a very competitive environment, competitive segment. And being a manufacturing company in the capital goods industry, normally where the margins are, around 7 to 8%.
Right.
Even if I get an EBITDA of around somewhere around 12 to 14%, I'll be very happy. But beyond that will be really, very difficult.
Got it.
The normal industry trend is not like that.
Also, I presume that if you're getting high margins, you would probably want to plow back that money into business to bag more orders as opposed to go in for higher margins.
Absolutely.
Okay.
Absolutely.
Okay, but still, from nearly touching double digits to whatever number you reach, let's say over the next 3 years, I heard you say that the order book, which is at 13,000 crores, God willing, would even touch 20 and maybe even higher, and maybe the long gestation projects in defense, etc., come into play. What's the revenue run rate, Mr. Roy, that you are envisaging? Because I think, again, some reports have that their estimate, maybe on conversations with you in your analyst day or otherwise, are of the opinion that you could maybe even do a 20% CAGR over the next 3, 4, 5 years.
That is what our plan is. This year, especially, we have the orders. Now we have to convert those orders into the sales revenue, and we are focusing fully on execution. Similarly, if all goes well, then we would like to grow at around 20% per year. And once we are able to do that, then when we reach a level which I would call escape velocity, then there will not be any looking back.
Well, meanwhile, we have Saurabh Mukherjee of Marcellus Investment Managers, who talks about why he's always investing big in India's healthcare and diagnostic sector. Listen in.
We've been big investors in diagnostics before COVID. We'll be big investors in diagnostics regardless of whether the next wave of COVID comes. And here's why. This is a sector which is roughly $10 billion in size. There's only 4 or 5 well-managed, organized players, and they account for only 20% of the market. 80% of the market is fragmented, it's mom and pop. Private equity and venture capital money had briefly entered the sector during COVID. Most of it has gone away now. So the incumbents, the well-run incumbents, have plenty of pricing power. That's been very evident over the last 12 months. Their pricing power has been evident. So, for example, Dr. Lal Path Labs, if you see in the last couple of quarters, profits are up 40-50%. I suspect that will continue. So this is part of our large cap portfolio, consistent compounders, and the mid cap portfolio. Similarly, Vijaya Diagnostics, which is in our small cap portfolio, has been consistently gunning out 25-30% profits over the last 4 or 5 quarters. In fact, they acquired a firm in Pune yesterday. So I think consolidation will be the norm in this sector as well-run players, Dr. Lal in the north, Vijaya in the south, as they buy the mom and pop shops out. As India gets richer, as India gets wealthier, older, there is bound to be more demand for these services. Pricing power is high for these guys. The return on capital is 35-40%. That means they generate a lot of cash, which they are using to consolidate their regional markets, and will happily sit there and make money, I think, for many years to come. The broader healthcare theme, healthcare, hospitals, diagnostics theme in India is very exciting, and we've been putting money to work in that. So we bought Rainbow Hospitals in our small cap strategy in August, and we'll see if we can put more money to work in healthcare and diagnostics in India.
Right, we've reached the end of the show, but before that, we know that people with physical disabilities or impairments face accessibility issues. The lack of a ramp or a lift, the absence of accessible doorways or toilets create those issues. But disabilities are not just physical, they can be intellectual or developmental too. Samarth by Hyundai looks at people with such disabilities who end up facing accessibility issues as well. It's just that there are less visible or obvious.
These children have intellectual but developmental disabilities which create limitations in cognitive functioning, social skills and adaptive behavior. This means that tasks most people take for granted can be a massive challenge for these children.
Occupational therapist, she teaches how to tie your, shoelaces or pin your. Though these small areas, like maybe for another person, what is a big deal? What is big deal? You have to only wear a panty or you have to only buckle your bra. But even small area things, takes so much of efforts of parents, individual. How I will teach her that if you're wearing a trouser or a jeans, how will you zip it?
Children at the Tamanna Special Education Center are from different levels of the intellectual disability spectrum. Based on their capacity to learn, they are taught functional life skills and multi-sensory activities in addition to academics. Given that people with intellectual disabilities struggle with communicating and performing practical tasks, better accessibility, whether in the home or in transportation and public spaces, can be created by the use of universal pictograms, simple complete words in signages, and secured, non-slip, well-lit stairs with handrails, amongst other solutions.
एक्टिविटी ऑफ डेली लिविंग सपोज बच्चों को कपड़े पहनना नहीं आता, ब्रशिंग नहीं आता, फेस वॉश करना नहीं आता अपना, इसी तरह से जैसे कहीं साइनेजेस हैं, कहीं टॉयलेट लिखा है, मेल फीमेल, इस तरह की साइट वर्ड्स हम बच्चों को सिखाते हैं ताकि उनको कभी भी वो काम आ सके। तो वो सब चीज़ें हम उनको फंक्शनल जैसे कार्ड बना लेते हैं, उनको बार बार वो वर्ड दिखाते हैं पिक्चर के साथ। पहले पिक्चर के साथ दिखाते हैं वर्ड लिखा हुआ, उसके बाद रिमूव कर देते हैं, पिक्चर को फेड आउट कर देते हैं, उसके बाद सिर्फ वर्ड, तो बच्चा वो भी पढ़ लेता है।
However, accessibility is not just a matter of physical spaces. For greater accessibility, awareness and empathy is foremost. Asha brings her niece Ruhi to school every day. She says the biggest barrier that people with intellectual disabilities face is lack of acceptance.
She has echolalia, so she repeats. If she likes something somebody is saying, so she'll repeat it. So people would say कि आप उसको मत लाया करिए walk पे. So I started saying, why not? I mean, she has equal right to the walking space like you.
Perhaps then, what is needed to break down the barriers and create greater accessibility for people with intellectual disabilities is to first address stigmas and perceptions.